2, 1.
Welcome to Made for More Living.
One small step for man.
With Johnny Jennings.
Kick the tires and light the fires, Big Daddy.
The fastest and most exciting hour of news, events, and real estate in Northern California.
And this is a fact that was proved.
Powered by eXp Realty. Online at madeformoreliving.com.
Does everybody know what time it is?
Get ready. Here we go.
So Matt, I don't know if you know this, but my dad used to ride motorcycles. Actually, he still does.
Oh, wow.
Yeah, so he used to ride motorcycles.
And you do not.
I have my motorcycle license, but no.
You do?
Yeah. So Valor and I, we had a Harley, a 2003 Heritage Softail that we then sold to my dad when she was 6 or 8 months pregnant. And here's why. Here's why we sold it to him. Because when my dad... when I was turning 1 year old, my dad was in a really bad motorcycle accident, like horrible. He's lucky to be alive, but he couldn't work for like a year and some change. So he's out of work for a long time. And so growing up, I always heard this story about how he had, what did he call it? Insurance, income protection insurance. He was always talking about how this income protection insurance allowed him and my mom to be able to keep the house. Because then later on in life, so he's bedridden because he had this motorcycle accident. Meanwhile, my mom...
So how long was he bedridden?
I can't remember. He missed my 1 year old birthday party because he was in the hospital.
Oh, wow.
So I was a little guy.
Sure,
right?
you don't remember, but...
I don't remember. But he was unable to work, unable to do anything. Meanwhile, my mom was pregnant with the twins, my brother and sister. And so she was stuck. At one point, she was had been assigned bed rest. And so, but this income protection that they had allowed them to keep their mortgage payment coming, keep their mortgage current, keep everything going. And that is, so growing up, I've heard the story, countless times. And then I got into real estate and I was like, well, shoot, how do I get anything that somewhat is a semblance of income protection? And then that's when I met Jenna just a few weeks ago. And so on the show today, we have Jenna Sullivan with Family Heritage. And what's great about you, what your product is that it's something like income protection, but more. You mind sharing a little bit about what it is you guys do?
Of course. So Globe Life Family Heritage Division is the name of the company. So we've been around since 1900, over 13 million policyholders. And the biggest thing about what we do is government has everyone thinking vision, dental health. We've all been programmed to think that's all we need. But I have a question for everyone listening out there. Who pays the patient?
Yeah.
No one pays the patient. I have people on my own team.
So what do you mean by, can you explain that
sure.
by what you mean by pay the patient?
Yes. So there's tons of examples, but I have someone on my team that was out for 18 months. Healthy guy, surfs all the time, got stomach cancer. Okay. So if you're out of work for that length of time and you're hospitalized, you're going through it, where is the funds coming from? Who is going to be paying you?
So the insurance pays, the doctors, the hospitals, the medications.
Right.
But what about your income? Who's paying you personally? That's what you mean by who pays the patient.
Yes.
Yeah.
And
to cover expenses like, your mortgage or groceries, right?
Yeah.
Or electricity bill.
Sure.
Stuff like that.
Or travel.
Travel, co-payments, deductibles, outpatient charges. There's been massive changes to healthcare. And if you look at your own, you'll notice there's percentages. They'll pay a percentage of things. Well, how much was that bill? If they're paying 80, what's your 20? What is that going to look like? What are the deductibles? Is it $3,000? Is it $6,000? I mean, some families, that's a big number to swallow if something like that happens.
Yeah.
So that is a big deal too. Medications that aren't covered. If you look through everything, there's a lot of vague language in there, a lot of may, a lot of if. Mm-hmm. And if it's not covered, where are the funds going to come from? I have cancer patients where the drugs they need are $11,000 a month. Their insurance may cover a percentage. Where are the other thousands going to come from?
And you constantly see people trying to bridge that gap with like GoFundMe and like fundraisers, and it's heartbreaking. But you're saying if they worked with you, you'd be able to help them with that.
100%.
So what is that? Can you give us some examples of like people you've helped in the past?
Yeah, absolutely. So I have tons and tons of handwritten testimonials that are in their own words, and I think it's really powerful coming directly from the client. This one's from Debbie. She said, purchasing this policy when I became self-employed was the single smartest financial decision I've ever made. Your coverage put my disability policy to shame. They stopped paying 2 years into what is now a 9.5-year fight with cancer.
Wow.
Family Heritage kept me out of bankruptcy and saved me from homelessness.
Yep.
So
9.5 years. Oh my goodness.
Because what I mean, they typically cover, what is it, 3, 5, 7 years?
typically on disability, yep.
Yeah. And
got
so, and you can't work when you're on disability. But with this product, you are able
you
to work,
can.
You
right?
can. Absolutely.
Yeah.
And you can use the funds for whatever you want. We've had people, I was sharing with you earlier, where his wife had a heart attack. They used it to make their entire house ADA accessible. So you can use the funds for any way you see fit, which really makes a huge difference. This one from Sarah is also incredible. She said 2 years ago, our agent John came to sell us this insurance.
Not me. It's somebody else. Yeah.
Didn't want to buy it first, but he said the premiums would be taken right out of my check and I wouldn't miss them. And on a positive note, if we didn't use it, after 20 years, we would get our money back. So I said yes, never really thinking I'd use it. This summer, I gave birth to the most perfect little boy, but after 10 hours, he was taken to St. Louis, Missouri to find out he had a rare heart defect, which actually, sidebar, is really common. 40,000 infants, just as a quick statistic, each year are affected by different congenital heart defects. That's triple childhood cancer. It just doesn't get the
Really?
propaganda. So just to add that to your tool belt. But 1 week later, we discovered that my son was going to need a heart transplant.
No.
So after hearing this heartbreaking news, we immediately called John. He walked us through step by step how to begin the paperwork to start our claim. Not only did he call every other day and check on how we're doing, but he came to the hospital to visit. Turner received his heart, and he was home before 2 months old. The people at the claims department were friendly and helpful. The claims were processed quickly. We received our money already. And thanks to Family Heritage, my son will never have to worry about anything financially. They have given us enough money to buy a new house, pay for his meds, and put money aside for both of our children. Thank you to Family Heritage for changing our lives.
That's cool.
I mean, it's life-altering stuff. And just the fact he goes to the hospital, that's not common. I mean, we have grown men crying on conference calls every week because we're a faith-based company. We're allowed to pray, for our patients, like the things that, and with our patients, the things that we're able to do and to be there with these clients. I mean, our customer satisfaction scores are through the roof. It's very different than any other insurance company I have ever seen or experienced.
And what's interesting too is Valor and I raised some money. We were part of a campaign for LLS, Leukemia and Lymphoma Society.
Yeah.
And so we learned a little bit about what families go through when they have like a disease like cancer or whatever it is. And oftentimes the travel is horrendous because you're traveling to cancer treatment centers or staying in hospitals. So you're paying for plane tickets, you're paying for hotel stays, you're paying for food. But with Family Heritage, you guys are able to help with that. Huge.
So, I mean, we pay up to 60 cents a mile, up to $2,500 per flight for you and someone to go with you. If it's a child, it's both parents and the child. That is life-altering, and up to $200 a night for hotel reimbursement. If you're able to get treated where you want versus where you can afford, I mean, it is a game changer. Yeah. I have personal family members where they said there were 30 days left to live, and instead was able to have years and years alive and comfortable and have hope because of this. Mm-hmm. I mean, it's been just huge. I've had so many different family members use it. And with travel, I actually have one that I shared recently with Johnny's team, but Robert, he said, when I purchased this cancer policy, we had 2 major health insurances. One through my wife, she's actually a teacher, city of Stockton, and one through myself, and he actually works at a rehab hospital. He said, I didn't think I needed the supplemental cancer policy, but I took it because of the 100% refund. And we do hear that a lot. Like the reason people get this, one is because if something happens, right, we pay you. But if nothing happens, we pay you.
You get the money back.
Yeah, you get the money back. And as California, I mean, as a whole state, we're not great savers. So this is a way to set money aside. You're getting it all back. And if something does happen to you prior, we give it to your family. It doesn't just evaporate into thin air. One of the biggest things with insurance is people will say, why are most people underinsured? Well, I'll tell you, one is it's too expensive. And 2, if you don't use it, you just throw all your money out the window.
Yeah.
Well, what if it wasn't too expensive? And what if we gave it back to you if you didn't use it? I mean, when someone told that to me, I said, well, yeah, everyone would have it.
Yeah.
And Howard said, good, that's our product. That's exactly how I want people to feel, because people shouldn't be worried about finances when they have big things like Robert. He literally says, unfortunately, my son Joey was diagnosed with brain cancer at the young age of 15. I can't tell you how many clients. I've been here almost 8 years. My dad, my brother, my uncle, my aunt, my best friend, we all work here. This is a family business for us. And I can't tell you how many children are perfectly healthy and then it happens. Do I think I'm going to get cancer? No. But is it possible? Yeah, 1 in 3 says it is, right?
Yeah.
And the two things that people have to realize is that it's possible and that it's financially devastating. He goes on to say, Joey battled cancer for 2 years, and even though we had great coverage, there was still out-of-pocket deductibles and unforeseen costs that had to be met. We traveled numerously to Houston and even lived there for weeks while he was being treated. All of my transportation and hotel expense was reimbursed back to me. I received over $70,000. I thank God I had family heritage. Every man, woman, and child should have a cancer policy. Joey was a brave young man who never showed fear during his battle and was willing to do anything and go anywhere. He fought a good fight. He wanted to live and frequently told me, Dad, trust God. That's exactly what we did. And Family Heritage helped to afford to give our son the very best care.
Wow.
It's
heavy.
Big.
And for the skeptics out there, they're like wondering why are you able to pay out? Why, if after 20 or 25 years, do I get all of the money I've paid back?
Sure.
Do you mind just talking briefly how that works? Because most people aren't aware of what these insurance companies are doing with the premiums.
Honestly, any insurance company could do this, right? All financial institutions function the same way. They invest, right? They invest your funds. They make so much money on your money, which is a beautiful thing. I mean, with 13 million policyholders, they make an awful lot of money. Mm-hmm. So to give the client back their initial investment, our founder calls it a loyalty benefit. Like, these clients were loyal to you. Like, we made so much money on these clients. Why wouldn't you give them back their initial investment and make them feel secure, make them feel good about having this? If nothing happened, they get back their initial investment. And what's huge about this is it keeps going at the same rate. It doesn't stop. Every other policy I've seen, once you term out, that's it. And now you have to re-up at a new age. And now you're older and it costs a lot more money, or they cancel on you, right? It's done. And then you have to re-qualify, which is another problem with a lot of policies. This one you don't. It keeps going. He said, again, these are your clients. They are loyal to you. Take care of them. Our founder, Howard Lewis, I've had dinner with him multiple times. I've met our CEO. I've sat down with our entire executive leadership team. And that in itself is an anomaly. I was in finance for 13 years. I worked for all the big dogs. I worked for Wells Fargo. I worked for JP Morgan Chase, Alliant, Exchange. I was in national sales with JP Morgan. So these are, big positions. You don't sit down with this, with the owner of the company. That's not how that works. Cool. The founder, and be able to talk, just openly and candidly. Yeah. And the way he thinks. My favorite thing is common sense, right? Common sense and just humility and human decency.
Taking care of people.
It's beautiful. Yeah. It really is. So
when we come back, we're going to talk about exactly who these policies can benefit. We're going to give some specific examples. So whether you're self-employed or you are employed by somebody else, we're going to go and cover that in detail.
If you knew a company had almost 1,000 5-star Google reviews, if you knew that they were voted number 1 in the area 3 years in a row, you would conclude that these guys know what they're doing, right? Well, that's who Johnny Jennings is with his team at Made for More Realty. They sell homes faster, on average, than everyone else in the area, and for higher selling prices. For instance, they've helped many couples who wanted to retire and move out of state, be closer to the grandkids, and they were able to sell those homes in record amount of time and for a record price for that neighborhood. It's the entire team at Made for More Realty, along with Johnny Jennings and his wife, Valerie, making sure you get the best service possible, that you're taken care of, and you don't have to worry about a thing when it comes to selling your home. In fact, they guarantee at least 3 cash offers on your home in as-is condition. So if you want more for your home, just Google Johnny Jennings and Made for More Realty and get more for your home.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So if you know me at all on even a superficial level, most people know that I enjoy the occasional cigar. But, I now have a family, 2 little boys, a wife, life insurance, getting policies that, because I could lie and say, hey, I don't smoke cigars. But as soon as they start their investigations, if I get cancer and die, they're going to find a reason, an excuse not to pay that out. And it's really expensive to, even at a young age, to buy term life policies for somebody that smokes, even the occasional cigar. But with Family Heritage, you guys have policies that cover everybody, whether you're low risk or high risk. Mind covering that briefly?
Yeah, of course. So the beautiful thing about it is whether you smoke or chew, whatever, habits you have that I would advise against, it doesn't count against you. You're still able to get the policy. It does not change the rate. We never increase rates either. So we have people that I can't even tell you, especially my arborists, how many accidents they've been in. Or my firefighters, my police officers. I mean, they're high risk people, right?
Yeah.
So you can file as many claims as you want. The claim never raises, and it doesn't increase due to the type of job you have or the type of habits
That's
you have,
huge.
Which is
That's
nice.
huge. Can you imagine, so many people are afraid to make a claim on their auto insurance or with their home because then it goes on the clue report.
Right.
And now all of a sudden, all the other carriers are going to jack up their rates because you're using the product that you're paying for, but you guys don't.
Which is normal, right?
Yeah.
No, and they never cancel. There's no contracts. There's no fees. There's no enrollment periods. For business owners that set this up for their employees, they have complete autonomy. There's no minimum participation requirements. They can pay for it for the employees. They could not pay for it for the employees. They could do certain amounts or certain policies. A lot of, the construction companies or the shops or the mechanics, they'll do accident policies, for example, for everyone, because it helps with their retention. It helps attract and retain talent. It also helps lower their workman's comp claims because most people, 9 out of 10, just quick statistic, accidents happen off the job. 9 out of 10, right?
Wow.
So when do you think most workman's comp claims are filed?
Off the job.
Monday morning.
Oh, Monday morning.
Right? Because it happened on the weekend.
Oh, it happened, but they're claiming it happened at work.
Not because they're bad people, but because they don't know what they're going to do and they're scared and they need money and they're not going to be able to work and they know it. So they'll come in, they pretend it happened on the job. And if you know anyone that's worked in workman's comp, what does that do to the business owner's rate?
Increases it. Yeah.
And it's so sad because the employee is doing something they don't even realize to the business owner. And it also, with workman's comp, can you be at work? No.
They can't work.
And there's months. I have a client right now going through it, and they can take, I forgot what the number was, but it's at least 90 days, if not more, to pay them. So you can go 3 months with no pay. I mean, the average American, that's not a good space to be in.
I have not one, but 2 family members who've been fighting workman comp issues for years. Like years and years and years and years. But if let's say the shop example had a policy for their employees, they can continue to work. You're saying the shop, would they still file a workman's comp, or would they?
If it really legitimately happened at work, yeah, absolutely. They get paid from both.
But if it didn't,
they don't feel inclined to do so because they have us and they know they're going to get money from us. So then it takes away that pressure, that stress, and they won't do that typically to their owners.
And that person can, if they're physically able, they can go back to work.
Yeah, exactly.
Yeah, while still collecting or having collected the fees, the money.
Got it. Mm-hmm.
Awesome. And so who this is good for, so why, so a dear friend, Frank Crandall, actually connected us, and he's like, Johnny, I don't do this often, but you need to talk to Jenna. You need to talk. When Frank says something, I lean in, I listen, and so we met, and you were honestly like an answer to prayer. Like Valerie and I were wondering, how are we going to, like if I get sick, if Valerie gets hurt, if something happens, how is the money going to continue to come in for not only our household, but the business, because the business employs more than just us. And so if we go down, it affects a lot of people. And I've been looking for answers. I've been looking for solutions. I hadn't found anything until I met you. And so if you are self-employed, if you are 1099, like this is something you should look into, because the rates are also crazy cheap. Because correct me if I'm wrong, but you did it based off the younger spouse.
We do. We try to save, the client money. They can add as many children as they want for a couple dollars. I mean, it's really inexpensive. Accident policies, just as an example. If you're, under 45, we're talking $14, $20 $4, $40, $74 for the nicest policy where you get in an accident, you're hospitalized, you're getting $24,000 a month in income, a $3,800 kicker for an overnight stay, monies for x-rays, monies for surgery, money for physical therapy, money if you had a concussion. Everything's algorithm based and you're getting funds for every little thing on that receipt. Typically, I'll look at it and I have an idea of what the client will be paid. And it's always more than that because our underwriters are fantastic. They'll say, hey, just a question. Did they happen to do this? Send me that too. I can pay them for that. I have never in my life seen a company do that in insurance. I definitely felt the way you feel where they're finding reasons not to pay me.
Yeah.
And this company's like, can you get me more receipts? I'm like, wow, this is amazing. This is what it should be. We should be trying to help these people. They're going through the hardest time in their life. Like your morning was fine this morning, but if something happens to your health, everything changes, right? Like the people going on with the fires right now. If your house burns down today, guess what? All those things you were worried about this morning, they're not important anymore, right? What's important is your health and your livelihood.
Well, speaking of that, you guys offer policies for firefighters too.
We
right?
do. And it's firefighter month right now, January.
I didn't know that.
National, we have a big awareness. So if you go, we're a McGrew agency. If you check on Instagram, LinkedIn, Facebook, we just posted something about it. But firefighters, crazy statistics on just how much more likely they are to have things happen, right? They're exposed to so much smoke inhalation, and these guys are risking their lives. If an accident happens on the job, something happens to them, they're covered, right? On or off. It's no type of exclusion for them, which is incredible. So all these, brave men and women right now that are out there helping with this huge life-threatening event, if something happens to them and they're our client, 1,000% taking care of them.
That's so cool. And I like the fact that the policies don't go up. So quick question, like on a more personal note. So Valerie and I, we're paying a premium, right? Is that locked in for a period of time, or does it go up as we age? Like, how does that work?
It doesn't. So it's the same price for life unless you change it. So you have the capacity to raise or lower as a client.
So we picked the highest.
So nowhere to go from that. No, I'm just kidding.
Okay.
Actually, after 6 months, you can double up on a lot of your policies. So I have my affluent clients that want more than the top tier.
Yeah.
So after 6 months, we actually do have the capacity to stack policies.
Okay.
But it's nice because any client, once you've been here for 6 months, you can raise it to whatever you want and you can decrease at any time. And we cover catastrophic events. We covered COVID. I had clients that were in ICU, just as an example, for 2 months.
Yeah.
At the Elite policy, that's $84,000. A lot of them, that was their salary for the year. They coasted on it for the rest of the year, and they were only in ICU for 8 weeks. That is life-altering, and that is our least expensive policy. ICU is not an expensive policy. Like, I think that starts at $3.80, right? For 30 and under. It's just not expensive, and it's life-altering. I can't express it enough. You're putting money towards yourself if you don't use it.
Yeah.
And if you need it, this will be the most important podcast you have ever listened to. So
it could change your life.
If your income fluctuates, like if you're in real estate, how do you guys figure that out?
Yeah, so it's all algorithm-based, and you choose based on what you want to put towards it per month. So just as an example of those accident policies, if you were doing the $14 policy versus the $24 policy a month versus the $40 versus the $74 income, you got in an accident, you're in the hospital, how much money are you getting every month? Daily, that's $100 a day, $200 a day, $400 a day, or $800 a day. Monthly, that's $3,000 a month, $6,000 a month, $12,000 a month, or $24,000 a month. So that's not tied to how much you make. You could have someone that, only makes $60,000 a year. They put $74, which is a pizza, right? Or 2 pizzas these days. And they could be getting that $24,000 in income, and they don't make that in real life, but they need that because they're not only going to be replacing their income. What if something happened to their child? They might be replacing both incomes. And you don't know how much the hospital and your insurance is not going to cover. They don't know how much the co-payments are going to be, the outpatient charges, the deductibles, anything that's not covered.
Yeah.
So they don't know how much money they're going to
So to
need.
answer your question, Matt, it depends on the tier policy
That you purchase. It's not directly tied.
And these aren't
You can
crazy
choose.
numbers. And
Yeah.
I like the fact that they're not expensive, because I've shopped, right, trying to figure this out for Valerie and myself, and your prices blow everything out of the water. Mm-hmm. And what's really cool is oftentimes people who are older maybe haven't paid for long-term disability or don't have that, are can't pay for a life insurance policy because they're considered more high risk, but you guys insure people who are even older, right?
We do. So in the state of California, it's up to age 65. So you need to be 64 or under, or loophole, married to someone, right? Under 65. Little
so my
loophole.
pops is going to qualify for a long time.
There you go. And then if you're in any other state, if they visit another state, you don't have to live there, but other states do go up to higher ages. Many
above
up to
65.
80. Yeah, a lot of them go up to 80.
Mm-hmm. Wow.
Yeah, a lot of surrounding states. Nevada as an example.
Is Nevada up to 80?
Mm-hmm, it is. Yeah. And so a lot of us are licensed in multiple states, and if we're in Nevada, in Tahoe, in Arizona, in some of these other states, we can sell up to, that age bracket.
So if you're listening and you're thinking, hey, you know what? I wish I would have done this. I'm now 60, 55, whatever it is, but the prices that I'm seeing just aren't making sense right now. Mm-hmm. I would suggest you reach out to Jenna and just, figure out what that would look like for you with Family Heritage. What's the best way for them to do that? My cell phone number is 530-619-9100. Call or text. You can also email me. It's jenna@northernstarsfinancial.com. And of course, you can just reach out to us, Made for More Realty. Say, who was that lady that was saying she'd give away money? We know who to connect you with. That's madeformorerealty.com. Absolutely. And the return of premium checks are huge. So I have personally handed out, I can't tell you how many. And if you go to McGrew Agency on any of those sites, you can see us passing out live checks to people that have been our clients for 25 years and are getting that money back now. Yeah, I don't think we covered that clearly. So basically, if you've been paying your premium, what's my premium? Do you know off the top of your head? Oh gosh, total? Yeah. $100, $400 I think it's maybe? I think it's $400. Is it $400? So I'm paying $400 for Valerie and I, and for everything. Like, this is we bought everything Jenna had. We bought it all. Top tier. We're top tier. Fancy. And insurance fancy. And so it's $400 a month, and if we pay that, it's the next 25 years, right? Mm-hmm. At the end of 25 years, we start getting that money back. All of it. Right? All of the money. Lump sum. Lump sum. Plus any claims paid. You got it. Plus any claims paid. We get that money back after 25 years. So whether you make a claim or whether you don't make a claim, you're not really losing your money in this situation.
That's pretty cool.
Mm-hmm. It's amazing. Yeah. So, literally.
Seems too good to be true.
It does seem too good to be true.
And they don't touch each other either. So if you did get in a huge accident, we paid $150,000 on that accident policy, but you did not use your other policies, you still get the funds back on the other three. So you would get the $150,000 in claims you were paid plus whatever you put into the other three policies. See, so pretty awesome. Yeah. So just for a disclaimer, I am not paid to have Jenna on the show. This is not like Johnny's getting a discount or something over here. Like, this is something that I've heard the stories, and I've seen firsthand the beneficiaries of products like this. And that's why, as soon as Frank told me about it, I was like, we gotta do it. We offered it to our agents. If you're an agent, if you're a real estate agent, you're like, hey, what would happen? Maybe you're the sole provider for your household, and so some works may provide programs like this. But if you're self-employed, if you're a realtor, and you're like, hey, if I go down, there's no more money coming through the doors. You need to reach out to Jenna. So please, please, please. This is not like this isn't a money grab. This isn't anything like that. This is just people helping people. That's why Jenna's on the show today. You got it. So, and thank you so much for being on the show. It's been a joy having you.
I love these stories that come out of the Made for More Realty office and Johnny Jennings. For instance, there was this lady who was wanting to help her mother sell her home. Her mother was aging, needed to move into an assisted living facility, and so they didn't have a lot of time. Obviously, they needed the money, and Johnny Jennings came in with a lot of compassion and care and understanding, didn't want them to worry about anything, was able to sell this young lady's mother's home in a record amount of time and for a fantastic price, brought them so much relief. In fact, when it came to sell this young lady's home, in addition to her mother's, Johnny Jennings was able to help her as well, and they were just so grateful. There's a reason why, the Johnny Jennings and Made for More Realty team have almost 1,000 five-star Google reviews, while they were voted number one in Roseville the past 3 years. So if you're looking to sell your home, someone you can trust, obviously we know that that's important, reach out to our good friend Johnny Jennings. In fact, listen to this. They've got this program where they guarantee to get you at least 3 cash offers on your home in as-is condition. That means no staging, no open houses, no costly needed repairs done. Just bam, 3 cash offers on your home in as-is condition. So here's what you do. You Google Johnny Jennings with Made for More Realty today and get more for your home. Again, Johnny Jennings with Made for More Realty. It'll be one of the best decisions you make in your life.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
New year, new president, and everybody is wondering, hey, is he going to impact real estate? Are prices going to come down? Is interest rates going to come down?
Well, Donald Trump, President Trump, was in real estate. He still is. He owns many properties.
Sure.
That's how he built his wealth. So obviously you would think, all right, he's one of us. He's going to do what's best for real estate. When he was elected president back in November.
I'm a Trump fan, but I do not think he's one of us when I think Donald Trump. I do not think that, but please continue.
Well, he's pro-business, wouldn't you agree?
He is pro-business,
All
yeah.
right, and
Yeah,
real estate, realtors are pro-business, right?
Yep.
So when he was elected president in November, you did see an impact in the stock market. It jumped pretty high.
There was a Trump bump for sure. Yeah.
There you go. And so I don't know how that affects interest rates, but obviously you have a conservative president who is in favor of business and the economy improving. That's one of the reasons why he was elected, is people were frustrated with the economy, with inflation, with how things are going. Real estate hasn't been thriving in recent months, and people say, well, it's because of the decisions the Biden administration has made, and it's affected the economy and jobs and interest rates. And obviously interest rates have been through the roof because of all of those decisions during COVID.
Yeah.
And so now you've got a new guy, fresh perspective. I mean, oh my gosh, as soon as he was sworn in, he's already at work making executive decisions. So is a business-friendly leader, president, going to have a positive effect on real estate? You think what?
I think in the long term he will, but a lot of people are wanting things like he's working very, very quickly. Like he was working before he was even president to get things done.
Sure, absolutely.
Right? And so I don't think he's letting moss grow under his feet, but there's only he heads up the executive branch. He's the commander in chief. He's not the president of real estate, right? So there's going to be a limited amount of things that he can do. And most people forget the main reason why we're in this mess is because of government spending. Government pumps trillions of dollars into the economy, and that drove inflation up. And so now the countries that have inflationary problems, it's a huge deal. This is like what happened in Carter in the 70s. Like this sunk Carter. This is inflation is something that needs to be addressed. The problem is, so again, let's go back a little bit. When they started raising interest rates, they thought two things were going to happen. One, they thought unemployment would go up, which it didn't. We don't know because the numbers keep coming out and they're saying, hey, employment's getting better. And then they come out with a number 30, 60, 120 days later, and it's like, oh, we were wrong. It was really bad. Here's the new right number, and then that number is wrong. So it's hard to trust the unemployment numbers. But when they started raising interest rates, they did it to increase unemployment, to help curb inflation, and they also did it because they thought it would bring prices down. But prices have remained stubbornly high, and inflation has remained stubbornly high. So until inflation comes down, his hands are tied. So how can he bring inflation down? There are things that he might be able to influence, but this isn't like an overnight in the next 30, 60, 90 days situation.
I know, but there's some folks who think that's possible. So my question is, if you could call him up right now on your cell phone, what kind of actions would you like him to make that would positively impact real estate?
So when I look at it, I think what we're looking at in terms of the real estate market, it's something that has been disfigured by government overreach, by people trying to make it better, trying to impose rent control, trying to lower interest rates during COVID to make housing more affordable, now trying to raise interest rates because now we have this problem. Well, my suggestion would be hey, let's deregulate some activities. Let's make it less expensive for people to build. Let's make it less expensive for people to operate their businesses, and let's let the economy recover. Let it heal. It feels like it's just been pumped full of drugs. Let's stop pumping everything full of drugs, and let's just drink some water, take a nap, and let's recover naturally.
I like that. I like that perspective.
That's where I land on it.
Well, it seems like from what we've heard from Governor Gavin Newsom that he's in favor of that. Because of the fires, he's saying he's going to make things easier as far as rebuilding and reconstruction down in Southern California, get rid of that red tape and the environmental restrictions so that the building process can be quicker. There's been some critics, though, that say he's got this special plan for all of that new reconstruction, and it's going to be multi-unit properties. Have you heard about that?
So here's the thing: when politicians are talking, I don't listen, right? Because I don't care what you say, I care what you do.
Good point.
And he's been trying to end homelessness. Millions and millions, hundreds of millions of dollars have been pumped into this, fixing the unhoused situation. No effect. And why all of a sudden now is a good time to cut this red tape? Why? Honestly, I think he's just trying to save his political future. Like, this fire, if it doesn't sink him, I'm really embarrassed about Californians.
Yeah.
Like, this should end his political career. If homelessness didn't, if the other fires didn't, if the budget didn't, thousands of homes burning because there wasn't water in fire hydrants. Like that.
Well, he's saying he's putting the blame on the mayor. He's saying this isn't a state issue. This is a city issue. They're the ones that dropped the ball.
Okay, well then where's the water coming from?
Right.
They're like, why are there not dams? Why are there not more? Why are we worried about saving the Delta smelt rather than saving people's lives? And so now you're going to cut some red tape and say then you're going to make it easier to build. Okay, I'll believe it when I see it, and then let's see what's really. Well, I'm just going to wait. I'm going to wait and see what actually happens because politicians, not only Gavin, politicians tend to promise. And then it never comes to fruition. They just want to get reelected. And then here's the other thing that really pisses me off about politicians, since we're talking about this, is what will happen. And they play this game time and time again. What they will do is they will say, hey, you know what? We don't have the money for this. We don't have the money to help rebuild the infrastructure. We don't have money for this. And so what we need to do is we need to pass a bond. We need to raise taxes. And the proceeds of this is going to go to this other project. The only reason why, we're already taxed enough. There's enough money coming in. There's enough revenue coming in. The money's going to your pet projects, right? That nobody's talking about. And now you're saying, hey, we have to do this for the firefighters. You have to do this for the cops. You have to do this for the kids. But really, you just pushed all the other funds into this other pet project. And now you're trying to get us for more money. Like, let's figure out with the resources we have. Let's try and if it was your house, Matt, if it was my household, people would have to tighten their belts,
right?
Stop spending on the things that aren't necessary and focus on the things that are. They don't need more money; they need to do better with what they have.
Right, I agree, and they have to be held accountable. And voters don't keep our politicians accountable, and the press certainly doesn't, and that's a challenge. They have this; they're not accountable to anybody. And so they just feel like they have this power and this freedom to do whatever because who's going to check them on it? Yeah, we're certainly not doing it.
I know. And so my heart goes out to those people that are in LA and that are affected by the fires, people that up here that are affected by the fires. But you know what? What my heart also goes out to is the people whose houses are standing that have not been in a fire, experienced a fire, but their insurance has gone up 2, 3, 4, 10x from what it was when they first bought the house. Like the whole idea behind buying a home is that your payment does not change, right?
Right.
Like it's a fixed principal and interest payment, and insurance. Sure, you got to pay for insurance, but now insurance has gone from an afterthought to the primary reason why people are either buying or selling houses.
Right.
Like we have a client right now. It went all the way up to $12,000 a year. $1,000 a month just for insurance on their property. They've lived there a long time, like over a decade, and now all of a sudden, their house has been negatively impacted. The value of their home, like if people are buying on a payment, that's $1,000 a month just for that. To get their premium down to a more manageable $9,000 a month, they now have a $25,000 deductible. This is a problem that's been caused by the politicians, and this is a problem that's not going away, and it's only getting worse. And so, and then the maps are getting rewritten, like in terms of what's considered a fire zone. Los Lagos is a fire zone. Orangevale is a fire zone. Sections of places like urban areas are now fire zones, and it's like, why? This isn't. So when we talk about in terms of making affordability, like homes more affordable, helping people buy homes, you need to bring the cost down. You need to bring the red tape down, and you need to allow companies like insurance companies to charge in a way that they're able to make a profit. Because what's happening is these insurance companies are now leaving, and now it's the state of California that's left holding the California Fair Plan. It's a very unfair. It's a great name, but it's a very unfair plan. And because the only option is the state of California, these premiums just keep going up. So, anyways, enough about that.
No, I know. So, what's the positive outlook then? What can folks find hope in when it comes to real estate in 2025?
So, the positive outlook is that if you are buying real estate for the long term, and you're buying it at a price point that you can afford, the value of that real estate is going to go up with time. And so, if you are considering purchasing a home, yes, it's gonna be a good investment, but you got to make sure that you're buying it under the right conditions and in a way that's affordable to you. And so what we do is we like to prepare people, not what if, even if. Even if interest rates stay in the 7s, you're able to afford your payment. We right now have a special product with the JJ Mack team where we are actually able, like interest rates are right around 7%, let's just say at the time of this recording, we could get you an interest rate in the 4s. We can get you an interest rate in the 5s really easily. Okay, it's not permanent, but we can get you this rate, so that way you're able to have that lower monthly payment. You're still qualifying for the 7%. Like, we're not getting people into bad loans.
Right.
We're just saving them money for the first 1, 2, 3 years before they would then feel the full experience of paying a 7% interest rate. And the hope is in the next 1, 2, 3 years under the Trump administration, interest rates will come down as inflation gets corrected.
Sure. Love that.
There's
good info.
So there's
good passion.
There's options out there. There's options out there. It's just when people are looking at, hey, I hope Trump fixes it, or I hope Gavin fixes it, or I hope when they look to the politicians aren't going to solve your problem. It's the local people that are going to solve your problem, and the local people have accurate information. And so if you're considering buying or selling a house, Google search somebody, figure out who's doing a lot of great business. Don't go with your cousin who sells a house every 6 months or has never sold a house. Do you want to give them a shot? Do you really want to give them a shot with what may be your biggest purchase?
Sure.
So the good news is there's great deals to be found. We have people out there who we actually have a program where we find homes that are like these sellers are motivated. It's a special algorithm, and the sellers are motivated. So if you want to learn more about our motivated seller program, reach out to us. We have properties. We have over 80 homes right now that are off the market. You cannot find them on Zillow. You cannot find them on Realtor.com. You cannot find them on the internet. These sellers have opted for discretion. And so sometimes that means you can get a great deal because you're not competing with the rest of the population. So if you're looking for things like that, if you're in the market, there is good news out there. I just wouldn't be expecting somebody else to solve your problem.
Love that. Good stuff.
So anyways, if you'd like to learn more about our motivated seller list or our off-market property list or our way to get you an interest rate in the 4s, just go to madeformorerealty.com. That's madeformorerealty.com.
If you knew a company had almost 1,000 5-star Google reviews, if you knew that they were voted number 1 in the area 3 years in a row, you would conclude that these guys know what they're doing, right? Well, that's who Johnny Jennings is with his team at Made for More Realty. They sell homes faster on average than everyone else in the area and for higher selling prices. For instance, they've helped many couples who wanted to retire and move out of state, be closer to the grandkids, and they were able to sell those homes in record amount of time and for a record price for that neighborhood. It's the entire team at Made for More Realty, along with Johnny Jennings and his wife, Valerie, making sure you get the best service possible, that you're taken care of, and you don't have to worry about a thing when it comes to selling your home. In fact, they guarantee at least 3 cash offers on your home in as-is condition. So if you want more for your home, just Google Johnny Jennings and Made for More Realty and get more for your home.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
If I had $1 every time, Matt, a client told me, hey, you know what? I need my house to sell for, I know comps are showing that it's $500,000, $600,000, but I need my house to sell for $550,000, $650,000, because that's how I can make my budget work. if I had a client tell me that, I'd have a lot of.
You could retire.
I'd have a lot. I could retire. Exactly. And so,
I mean, I get their perspective. If I was in that situation, I would think it's just a matter of how much sweat we put into it, how much work we put into marketing this house, and finding that right buyer. Yeah,
it just takes one buyer.
It just takes one buyer, and it's just a matter of time. It might take a little bit longer. It might take more work. It might take more signs. It might take more marketing. But if we just put in the work, we're eventually, my fingers are crossed, we're going to find that person that really wants this house, because my house is special. It's unique. There's a buyer out there that's been looking for a home, and a bright light is just going to shine on our house. It's just going to be this glowing halo over my home because it's perfect for that right person. And it's just a treasure hunt. We got to find that buyer.
It's exactly a treasure hunt. And so when I hear people say that, like, I totally get where they're coming from. Like, oftentimes, so much of their net worth, so much of their funds are tied up in the home. They cannot access it until the home sells.
Right. Maybe they're thinking about retiring out of state, and they got
to go to Texas.
Right.
Home prices in Texas are going up. So you got to sell your house for more now because home prices have gone up where you're moving. But here's the issue: is that the home at the end of the day is worth what the home is worth. Real estate is a super simple business. Homes sell when price and condition align. So what I mean by that is if you're wanting a higher price, then maybe, and the market has said, and so, for example, for our marketing, we have a 195-point marketing plan. We have a comprehensive, extensive marketing plan. We have a Bay Area buyer marketing plan. We do traditional marketing, digital, social. We're not just throwing the sign in the yard and praying that the home sells. We're putting actual work, money, and time into marketing your property. So if at the end of that, 10 days in, 20 days in, 30 days in, it's been seen by thousands of people, and people have all essentially said, hey, I'm not interested in making an offer on your home. Well, then, hey, the market has responded. But oftentimes people will hold out for that price. And in the rare instance, they do get it. But 9 times out of 10, what ends up happening is they started high. They were not willing to accept the offers that came in initially that were realistic offers. And then eventually they end up kicking themselves because the house sells for less money. And so now this pot of money that they had to work with, they said they needed more, they actually end up with less. And so that's why it just fires me up when people say that, because I want to get you the most amount of money. Houses on average with us sell for 3% more than when listed with the competition. So if you're at a $500,000 price point, that's an extra $15,000 in your pocket. If you're at a $100,000 price point, that's an extra, or $1 million price point, that's an extra $30,000 in your pocket versus with the competition. But at the end of the day, they're worth what they're worth. That makes sense?
Yeah. If I was in that situation, I would ask, do you really want to sell your house? Because some folks may think, well, I don't want to sell my house unless I can get this price for it.
Yep.
And I'd want to have that serious conversation because I wouldn't want to waste all my time. I'm going to put a lot of work into trying to market and sell your house. And are you really interested in selling your house?
And we do have that conversation.
Yeah.
So oftentimes people are like, if I don't get my price and it's an unrealistic number, if I don't get this, then I'm not selling. And I'm like, okay, at least I know where we're at. So,
right.
Because how the team has been trained to ask is, when this house sells, where are you going next? And if they don't know, they're really not motivated. But if they're like, hey, when this house sells, I'm moving out of state, I'm moving in with family, we're going to get a smaller house, we need to relocate because of schools.
Sure.
Like they've thought
they have
this
to have a
through.
reason. Yeah.
They've thought this through. And so I totally get wanting to net the most amount of money on the sale of your house. In fact, currently, 3 out of 4 Americans view home ownership as part of the American dream, still to this day. And home ownership is actually bigger with like the millennials and the Gen Zers, the desire for home ownership, than even with like the boomers.
Why is that?
The guess behind it is they don't have homes yet, or they're aspiring towards home ownership, whereas maybe the boomers and stuff already have homes. So it's not as big of a aspiration for those older generations. But the just because your grandparents or your parents have homes doesn't mean the younger generation doesn't want that either. Mm-hmm. So it's very interesting that 3 out of 4, but it's really a problem right now because affordability is a serious issue. Home prices are still at or near record highs, and we're at interest rates. Now I get it. If you're listening to this and you're like, hey, when I bought a home in 1983, my interest rate was 13%. Great. Totally get it. The average income was, $30,000, $40,000 a year. And the average home cost about $50,000, $60,000, right? The average. so just check out how those numbers work. They're very different than the numbers for today. So you could go to work, buy an orange, and get a house, But now they're 7%, and home prices are like in Roseville, Folsom, El Dorado Hills, just a decent home, 3.2, like $500,000, $750,000. Like the numbers are just insane. And then when you factor in a 7% interest rate,
sure,
like you're seeing a $5,000 mortgage payment. And so that's why we have these great programs where we are actually able to help people assume the loans or get them a lower interest rate. So if you want a rate, so I hear people all the time, they're like, Johnny, if I could get an interest rate in the 6s, I think I could make that monthly payment work. Well, if you need an interest rate in the 6s to make that monthly payment work, you need to call us today. Just call madeformorerealty.com. Just Google it. You'll find us. We have nearly 1,000 5-star Google reviews. Call us because we can get you an interest rate in the 6s, 5s, maybe even in the 4s, depending on your situation. So if that monthly payment is an issue for you, like it is for so many other people, there are options out there. Just please reach out to us. Go to madeformorerealty.com. And then that way, if you've been sitting on the fence, because here's the great thing too, the interest rate, that's horrible. I totally understand it affects the monthly, but what's kind of nice about the interest rate is that when you buy a home, the interest is what you're paying first. And those interests, you can help, take deductions on that on your taxes. You can't necessarily write off your rent. And so if you are looking at that 7% interest rate, like, oh man, this is all bad. Yes, it's bad. I wish they would come down. It would help everything. But, the silver lining is it'll help you out on your taxes when it comes time to file.
Yeah. And eventually when rates do come down, then you can refinance.
And you can refinance, yeah. They say date the mate or date the rate, marry the house. I want to be clear, like, you got to be careful when you're doing that. We're working with a lady right now who was told that by a realtor, put her in a house that she could barely afford, and she was just praying that interest rates would come down. And here we are 3 years later, interest rates have not come down.
Right.
And so she's having to figure out, am I going to short sell this house? Am I going to walk away from it, go through foreclosure? So we want to make sure you're protecting and you're put in the right situation for you and your family. So again, not what if, but even if. And,
right.
And that's what our programs offer. So again, just reach out to us anytime. We're happy to have a conversation. madeformorerealty.com.
One last reminder, if you want a simple, easy way to sell your home, reach out to Johnny Jennings and his team at Made for More Realty. They promise to get you at least 3 cash offers on your home in as-is condition. Oh my gosh, imagine the worry and the stress just melting away because you don't have to do any of those costly needed home repairs, no staging, no organizing and cleaning, no open houses, just 3 cash offers on your home in as-is condition. There's a reason why they have almost 1,000 5-star Google reviews, why they were voted number 1 in Roseville for the past 3 years. Johnny Jennings and his team at Made for More Realty, they've been doing this for a while. They sell more homes than anyone else in our area, so you can trust them. 3 cash offers on your home in as-is condition. Just Google Johnny Jennings with Made for More Realty and get more for your home.